Is this thing on? Yes, it is. Good morning, everybody. Happy Tuesday. Welcome to the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso with you on this lovely morning. Hope you had a great Monday and hope you're having a great start to your Tuesday. It is early yet. We have things to discuss. As always, we have charts, we have scans, we have ideas, we have opinions, facts, and that's where we'll leave it. Today's guest, Larry Tentarelli, Blue Chip Daily, will be on the show at 9. And Kenny Glick will join us as well. And that is the plan. So, good morning, chat. Let's get the show on the road. Do I have Steve and JC? I hope I do. Well, even if I don't, start without them, right? Just do it.
All right, we are back, baby.
Good morning.
Can I make a confession?
Please.
So after the Rockettes yesterday, which what is it? The Christmas Spectacular? Is that what it's called?
Yeah.
The Rockettes at Radio City, awesome
Yeah.
as always. And I'm not like Mr. like show goer, right? Obviously, in case you hadn't noticed, it's a great show. It's 36 girls. I mean, just so many different outfits. I don't know how they get so many outfit changes. It's wild. The orchestra's off the charts. They got a harp. They have a harp in the orchestra. It's sick. So anyway, we go to FAO Shorts afterwards, and we got some toys for the kids because that's what you do. I got me a toy. I got me an airplane drone.
Okay.
Drones are getting really cool.
Dude, look at
My
this.
friends are into these. Yeah.
Look at this. This is a remote control airplane drone. It's made out of styrofoam, so like it doesn't hurt.
Oh, that's great. Fly right in your kids'
Sweet
heads.
is this thing?
Yeah.
It comes with backup propellers.
Wow.
I'm charging it right now. I don't think I'm gonna
High-tech.
be very good at flying it, but I'll figure it out. I've done harder things, I feel like.
But this is electric. So this
Morgan's
is
like, why'd you buy that? It's for 8-year-olds plus. I'm like, I'm 42. I got this. She's like, oh, you got it for you. I'm like, yeah.
I wonder if like Joby
Sweet
makes
is
this.
this?
Yeah. How much was
Anyway.
it? Because the amount of money that my friends have been spending on these drones to play with and like fly over the ocean, crazy. Like thousands of dollars. The drones get expensive.
I'm not gonna play with I'm not gonna
Giancarlo.
fly it over any oceans.
Have you seen Giancarlo's drone? It's so
Yeah.
high tech. We almost got thrown in jail in Tokyo for flying this thing around.
Dude, in India, he was flying it illegally in India.
He doesn't care. Dude. He's
All the
flying it
India
everywhere.
documentaries that we have, like it starts with illegal drone footage. It's great.
Oh, we have so much drone footage of Giancarlo being confronted by
I
the
just
Styrofoam,
wanna recommend that you
no?
get
Nobody, no, you
insurance.
don't think that's cool as styrofoam?
I think that's great. I think it's awesome. What is the range though? Like, can you take it outside the wind?
150 feet.
Oh, that's great.
And then you don't want to take it outside the same way that you wouldn't want to fly a frisbee if it's too windy. So that's kind of the rule of thumb. So I learned last night. I guess we'll see what happens.
That's too cool.
right.
Look at you. Look at you dadding it out.
Dude, FAO Shorts, what a great store. Like seriously. Like it's a fantastic store.
Did you guys like do all day in the city? Like, were you there all day?
Afternoon.
Yeah.
Afternoon and
Nice.
evening, little Del Frisco's, little Wagyu beef, you know,
Those are
little Left Bank Bordeaux. How you doing? Little Saint Julien 2006.
All right.
Great wine list at Del Frisco's, by the way.
That's what I really wanted to know. All right, great.
You know how I roll.
Yep, good.
All right.
Shall we?
Yeah,
Yeah.
let's state markets.
All right, ladies and gentlemen, I actually don't have my futures up. So hold on, let's see. I'm
not
so
gonna-
excited about my plane.
You know,
We've got all right, that was fast. Dow futures are flat, so there's nothing going on. That's probably why I didn't have my futures up. There's nothing happening again this morning. S&P futures also flat. So literally, the Dow futures right now are down 0.001. So just under 45,000 for the Dow. Wow. S&P 500 futures up 0.04. Right around 6,065. NASDAQ 100 futures also flat. Doing nothing this morning. 21,211. Wow. 30-year bond futures also flat. We're around 119.5. Crude oil up 1.6%. Still at that 69 level. Boy, does crude oil love that 69. Copper up 1.5% at 420 for those who partake. Gold is up about 1/3%, 26.65. Silver up 1.6%, 31 and change. With the volatility index down to 13. Mr. Steve Strazza down to 13 there for the old volatility index. And what about in funny money land? What stands out?
Oh, what stands out? Were you
Yeah.
paying attention? Who was up in the middle of the night?
Mm,
Nobody?
Not I.
Very, very much the junkie status here from our chief YOLO officer.
Yeah, that's right. The staking stuff, I have done so well staking Solana, but this is a pain in the ass, and everybody has to understand like the way that staking works. Some of these tokens, dude, you go to destake them, they're like, cool, you'll hear from us in 3 weeks.
Dude,
That's not okay.
that happened to me.
Yeah, when the music stops and the bear market for crypto, falls upon us and the bull market is gone, it's going to happen like that. And you're going to want to be out of these positions. So you have to de-stake ahead of that, right? You have to like foresee that coming and be ready. So like stake away innings 1 through 6. But when we start to get late stage, I think you got to start de-staking.
Boy, was I staking hard last night at Del Frisco's. Bitcoin, hey now. See, I couldn't help myself. I'm batting hard. Dad jokes too. Bitcoin down $1,400 this morning, down 1.5%. 94,450. Ethereum just under 3,600, down 2%. Solana down 1.5%, 222. Binance at 640, down 1%. Total crypto market cap. Spencer Israel after a new all-time high yesterday. Yesterday pushing 3.5 trillion all the way down to 3.34 trillion. And Bitcoin dominance, new lows this morning, down 56%. How do we feel about this morning's futures?
So we have to talk about this. It's almost like the crypto market is just like the equities market. It's almost like these markets are the same. In other words, we had this really, really thin or narrow bull market for stocks where people were talking about the Mag 7, only 10 stocks are working. It's just Nvidia and Apple, whatever. That changed. And now breath is absolutely popping off. Everybody's joining the party. The worst stocks, right? The speculative growth stocks have become the best stocks. And then we think of a crypto market that we're 2 years into this bull market for the blue chip cryptos. It's been Solana, it's been Binance, it's been Bitcoin.
Tell me more about these blue chip cryptos.
The big boys, right? The top 5 cryptos have really been doing most of the heavy lifting.
Is Doge a blue chip now, or is it?
I look at the 4. I really look at the 4.
Is like Binance a blue chip?
Listen. You could easily argue. Yeah. So I think a Binance, Ethereum. Does
your founder have to be in prison or dead in order to be a blue chip?
Or anonymous.
If the creator of my token did not go to jail, I probably don't want it.
No.
So, but Solana
added premium for those founders that went to prison.
But wait, we have some big movement on the cap scale list. Solana got flipped hard. Ripple's now 50% larger than Solana. So like, what are the blue chips? It's getting a little funky out here. But the point I'm trying to make is this is no longer a narrow bull market for cryptos. Everything is working. And frankly, I'm annoyed because I have like 50% of my crypto holdings in Solana, and I'm not making much money out here because all these other coins are going 40%, but they're not moving the needle for me because I have too much Solana. So it's now the part in the cycle where I'm de-staking my Solana. I'm moving Solana into these other, crazy shit coins and altcoins, but that's just the part of the cycle. That's the same sort of behavior. That's the parallel behavior as us moving into more ARK stocks or more speculative growth stocks, buying more biotechs in the stock market. So I think we need to do that in the crypto market as well. These two things happening at the same time also, I think, makes a ton of sense.
Why don't you throw up the minor leaguers? Speaking of, small cap names, the junkiest names, the minor leaguers list, guys. And this is one of my favorite things that we do at All Star Charts, where we are specifically looking for small cap stocks. And let me tell you a little story. The reason that this exists originally is kind of what Steve Strazza was just alluding to, where, it's easy to miss some of these small cap names. You're focused on Apple and Nvidia and, McDonald's and whatever, Disney. And then all of a sudden, this $1 billion, $2 billion stock's up 30%, 50%, 200%. And it's like, damn, like I missed that one. And then the question becomes, how do we make it so that we don't miss those things anymore? So that was many years ago. So we created what we like to call the minor leaguers, which essentially is a list of stocks that we want to own before they get called up to the bigs, right? And traditionally, small cap stocks, the universe is roughly between $300 million in market capitalization to about $2 billion in market cap. But we don't think that's right. If you're not $1 billion, like you're pretty useless. Like like get to a billion and then we'll talk. It's 2024, right? We don't have to stoop down to 50 million, $100 million stocks. I mean, you can, but there's quality filters when you're waiting for a billion. And there's still plenty of opportunities at $1 billion, by the way. So here you're going to find companies with a market capitalization between 1 and 4 billion. To us, that's the sweet spot of small caps, right? 1 to 4 billion. And then mid caps are basically between 4 and 30. That's how we think about it. We've been doing this for years, Mr. Steve Strazza. Do you still agree that that is the right way to approach it? Or do you think your mind has evolved? And you can keep it real. It's all good. You keep it real if you think that that's wrong now.
No, definitely. In some markets, will you want to go fish down the line for 750 million? Sure. Right. That'll always happen.
Especially in certain sectors, maybe like gold miners, maybe biotechnology. There's certain areas where, you know what, dig a little deeper. It's fine. That's just the marine shippers. Like there's just certain industry groups that live in that small cap world, right?
Yes, but they're one momentum thrust away from coming onto our list typically. In other words, you got a $500 million stock, it pops, it rips, it doesn't take long to double, and then it's on our list, right? So
do you think, Mr. Strazza, that it would behoove us and all of our investors to create a junior minor leaguers list where it is only companies under $1 billion? And if we were to do that, what is the floor of market cap?
I think you go all the way down to 200 at that point. You could
200. Is that necessary? 300?
Listen, 300, they consider that a small cap. So
yeah, that's probably right. So you think that we do a junior minor leaguers? Are you listening out there in internet land there, Fonz?
This would be the time to do it, right? This is a rather conducive environment to do something like that. I also really like, Fonz said, yes, sir. I also really like the idea of...
Fonz likes it. I could tell already. Fonz is like, oh, yeah, it's a great idea. We need to do that. Like, he's already doing it. It's already done.
And we've done this with other scans in the past. I think it might be it would probably satisfy me enough to just do the additions list, right? In other words, here are the ones that are coming on the list. I want to know the ones that have big momentum and are just crossing that billion cap threshold, right? That's another way to do it. Look at how beautifully diverse this list is, right? You talk about how this list can go anywhere. It's really just about size.
Why don't we do this? Why don't we create the 300 million to $1 billion list, so the junior minor leaguers, and then at the top of the list, we have the ones that just crossed that $1 billion mark for the first time. And do we do the first time ever? Or the first time this year, or the first time in this cycle? Like, how do we quantify that, you think?
I think you could, I don't want to overthink it. You could do like a low to a high range to try to like eliminate some of the volatility around that threshold level. But I think you just put a limit on it, right? So they can only be on the list once every quarter or something, right? Yeah. You're talking some seesawing around $1 billion.
We'll talk about it. But see, folks, if you're out there listening to see, this is how the sausage is made. This is how it is. We have a problem. We find a solution for it. And then that solution becomes so great that we want another version of that, right? So we create a new problem, right? Like first world problems. So like when we did the Hall of Famers, right? For the Hall of Famers, these were, in fact, why don't we throw up the Hall of Famers? Let's do the exact opposite.
I just wanted to point out how diverse this list is, though. Like, look at all the different stocks on here. This list goes everywhere. You got Victoria's Secret, you got Peloton, right? A lot of speculative growth on here. Lemonade, IMAX, you got Carnival UK, Cheesecake Factory. I am so long the bit deer right now. We even have Bitcoin miners on this list. A ton of financials, and you go on down the line. We have Lending Club, Fidelity Insurance. Chef's Warehouse, what a great store.
Whatever happened to Turbo Chef?
Turbo Chef? I don't know.
I was in that IPO actually.
I don't know.
Can you throw up slide 3? So this is the opposite. So let me just show you guys what's happening here. So I've been a big fan of the Dow Jones Industrial Average, the world's most important index, and its components, because if you get those 30 stocks right, in the direction that they're heading in, you're going to get the overall market right, is how I look at it. But it's only 30 stocks. There are other stocks out there that are not in the Dow, or historically have not been in the Dow. Some of them have been added over the recent years, that are also important, and you could argue are even more important than some of the stocks in the Dow, right? Like
Yeah.
Nvidia has been more important than Intel, for example, for quite some time, and now Nvidia has been replaced. So what we did is that we got the largest 150 companies in America, right? Call them the Hall of Famers. Our sports analogies are consistent around here. So our Hall of Famers are the largest 150 companies in the world. The reason we did this was because the Dow 30, as great as it was and still is, there's more stocks. So we decided that it was about 150 names across industry groups, across sectors. It doesn't matter. These are just the largest 150 names. And then we sort by relative strength. Because of course, the only way to make sure that you own the best stocks is to buy the best stocks, right? So not only has this been a great indicator of the overall market, if you get these right, you're going to get the overall market right, but also from a trade ideas perspective, these are the best stocks. So I didn't quite think it through when we were creating this. But as it turns out, we have found so many tremendous opportunities in these names. And then a third benefit, which I also was too dumb to realize until we actually started doing it, was that for options traders, it's like a paradise. All these stocks pretty much all have liquid options markets. So if you're an options trader, this is a great list. So what started out as just a way to expand on the Dow 30 components and get a larger weight of the evidence, some of the parts perspective, turned into a great scan with great ideas, options traders' dream. So what do? We're like, wow, it's only 150 companies, but what about these other stocks? So what we did was we created the Junior Hall of Famers, which are the next 150 stocks, right? Do I have that right? Is it the next 150 for the juniors?
Yeah.
So what you're going to end up having is you're going to get a lot more like 30 billion, 40 billion, $50 billion companies in the Junior Hall of Famers, while in the big Hall of Famers, you're going to get the biggest names, right? So that's what ends up happening. So we iterate, we reiterate, we continue to build, like the Junior Hall of Famers stands on the shoulders of giants, the Hall of Famers before that, the Dow Jones Industrial Average before that, right? So we're building and building and building. Who knows what's happening next? I don't even know.
Yeah.
It's so exciting.
No, no idea.
So how did I do with those explanations? Did I tell the story right? Because it's been years since we've been doing
this. You did so good. Yeah. It's a great list. It's a great list.
Yasul, great question from Yasul. Throw back the minor leaguers, please. Great question. Yasul wants to know, is there cross traffic with the 2 to 100 list? Funny, you should ask. Mr. Steve Strazza, why don't you tell the folks just how much we love it when they are cross-pollinating with one another?
We do work on this. Actually, a friend of ours, ASC family member, came to us and said, can I get these lists? And I said, yeah, we email them out every week. You can get them, sign up. And he said, no, can I get the lists in Excel? I said, what do you want to do with them? He goes, I want to track how much overlap there are between all the scans. I said, absolutely, you can have the list to do that. So now every week, Riley runs an overlap scan for us and shows us all the ones that are popping out and are on several lists, right? And then you can link to those lists and we check them out from there. So we see it, and it's something that we always did kind of live as we're looking through the list. Oh, hey, Victoria's Secret's on the 2 to 100. It's also on minor leaguers. Okay, great. Right, so it's like a confluence of evidence there, but now we're doing it like in a much more formal way and really tracking it.
Yeah, it's great. And then the minor leaguers are always going to find the best opportunities in small caps. So if you want to throw up slide 4, the indexes are now working too. But just understand that before the small cap indexes were working, here's the small cap S&P 600 making new all-time highs, Russell 2000 small cap index making new all-time highs. Before this was happening, there were still tremendous opportunities in small cap stocks for the last 2.5 years. So anybody who tells you that small cap stocks have not been working, maybe their small cap stocks were not working, or in most cases, they never even bothered to look. Now more small cap stocks are working than at any point this entire cycle. And the breadth in small caps is actually stronger than the breadth in mid caps and large caps, believe it or not. So that's a pretty fascinating change of events. Not to mention the small cap momentum index. Throw that up one more time, hitting new all-time high. So this is small cap momentum factor. XSMO, which has over $1 billion in assets, by the way, Strazza. So it's not like one of these like obscure randoms, ETFs. Like there's $1 billion in here.
What index?
This is
XSMO, huh?
Yeah, so this is small cap momentum.
Wow.
32% industrials, by the way. So it's a third industrials, which is why this thing looks so good, because small cap industrials this bull market have outperformed the large cap indexes.
I feel like it's almost always the case.
What is?
Small cap industrials are just so good. There's always stuff working in that group.
This cycle.
You're
just going to say, oh, small cap industrials are always working? No.
There's always something in that group that's working. It's a vast industry, or it's a vast sector, right? So industrials and discretionary are different from other sectors where there are much lower correlations, right? So tech, most stuff is either working or it's not, right? Tech as a sector moves together. Same with communications. Industrials, you got so much weird stuff going on, right? The waste management companies are working. The building materials companies are working. Like something's always working there. That's really all I'm saying.
No, I wanted to have this conversation because I was thinking about it. Yesterday was Monday. We run our minor leaguers every other Monday. Yeah. So I just wanted to make sure that, we reiterate to everybody the types of things that we're doing. Tonight, we're going to be talking about, we got my monthly chart strategy session. I love it. I love it so much, Mr. Strazza. And speaking of reiterating, we have been doing this. We've been doing this at the beginning of every month for like 10 years now, almost, probably, right? Close to 10 years.
Yeah.
And it was so good and so valuable, this little powwow that we do for an hour with 150 charts. And, JC just yells at you for an hour.
Yeah.
I don't mean to. I just get, I get very enthusiastic. It's not yelling, it's enthusiasm, right? Think of it like that. I get very excited. So what we did was, it was so good and added so much value that we couldn't wait a whole month to do it again. So we do one in the middle of every month also. So we do the beginning of the month, which is tonight. Spencer, if you want to drop the link, we do it at the beginning of the month where we zoom out, identify the direction of primary trends. Because Steve Strazza, I can't imagine anything more important than participating in the direction of primary trends. Can you?
Yeah. So the first conference call each month, I think you zoom out even more, right? You really try to make
extra zoom out.
Yeah. So
mix in some quarterlies every now and then, just a tip, see how it feels.
The Perlman format. Big focus on monthly charts, and wow, did we have some big sticks in November? Like this stick in small caps, we've been waiting for a long time for this.
So many sticks, man. So many monthly sticks. We just came out, by the way, speaking of sticks, dude, we got, at the end of this month, we got dailies, weeklies, monthlies, quarterlies, annual candles at the end of this month. So very exciting around here at All Star Charts. Very exciting time.
I'm going to say my favorite is software. I'll just give you that. IGV.
Your favorite stick?
Yeah, I mean, just look at that monthly chart, dude. You have a huge flag
pattern on the it. It's in there.
Yeah, it's just really good
currently slide 20.
And I'd also like to say semiconductors, now that everybody seems to be over this trade, is probably going to just come roaring back.
Hundo P.
Stocks off.
Hundo P, my man. I've been thinking the same thing. Can't wait to talk about it tonight. A little intersector rotation. Is it inter or is it intra?
It's intra. I think the journalism major.
Got it. Our English major.
Was I summoned? Was I summoned?
No, we learned from you yesterday. We don't need you.
Okay.
Yeah, we don't need it again. You can go away again. Bring in Kenny. Let's bring in some real knowledge.
Kenny's not here yet.
Is Kenny not coming in today?
No, I mean he should be.
Kenny is just the man that I wanted to speak with. We got Larry today. Larry the legend coming in hot today.
Even XSW. I won't steal your fire for tonight, but big monthlies out here, some big monthlies, really good stuff.
Well, while we wait, I wanted to wait for a little recess, but while we're here, I'm gonna be the downer.
No,
throw up slide 2, new slide 2. I'll do it. So this is one of my heroes early on. Rest in peace, Mr. Art Cashin, a legend. This was us together in 2013. So this is over a decade ago. Me and Art, I tweeted it out. I remember tweeting it out saying, hanging out with one of my heroes. what was interesting about Art Cashin is that he transcended New York. Like Brian Shannon, BC Lund, Ryan Dietrich, like all our friends from all over the country that live in other states that are not the Northeast, they would come to New York and they would specifically say, hey, JC, I know we're going to dinner tonight, but can we go across the street from the New York Stock Exchange at the close? Because I know Art Cashin is going to be there having a cocktail, right? Every day after the close, Art was there at Bobby Vans, right across the street from the New York Stock Exchange, sitting right around the corner, same seat, holding court, telling old stories. And our friends coming in from around the country knew that, right? It was like a known thing. So they'd always be like, oh, JC, can you take me to Bobby Vans, say hi to, Art? I'd be like, no problem. Great guy, great stories. I mean, dude was down on the floor of New York Stock Exchange longer than anybody I know. So the stories that he tells, were fantastic. So shout out Art Cashin, very creative. He would write poems about the market at the end of every year around the holidays. Knew everybody knew him. Absolutely the man. So bummer to see him go, but lived a good life. Shout out Art Cashin.
Yeah. And a fixture, arguably the CNBC fixture, right?
One of them, yeah.
Yeah.
Good question. Did he ever write a book or have any media? I don't know. He was just really well known. He was on CNBC every day.
Yeah. Shout out Art. Bummer.
Yep.
Good egg.
Yeah.
How skinny I was.
I wasn't going to say it, but I'm glad someone did.
Dude, I was like 205, 202. I'm like 215 now. I looked good there.
Yeah. Let's talk about something. So yesterday, what is left to say about the sell side that hasn't already been said? So yesterday, and listen, this isn't about Craig Irwin or Roth Capital. We see this all the time, but it's just a great example. You have to be aware that this happens way too much with the sell side. This is a tweet from somebody else. Longtime Tesla bear Craig Irwin appeared on CNBC to speak negatively about Tesla. He just raised his Tesla price target by a whopping 350%. He was at $85 a share, and he upped it to $380. So took the stock from basically forecasting, a 70% drawdown to a 7% gain.
I appreciate that more than the increase by like $1.
Dude, this guy's been bearish for years.
I don't think anybody listens to these folks anymore.
They put him on the TV.
There's only like 4 of them that still have jobs. So like, I don't think it's that like
true. A lot of them still have jobs. It's crazy.
Yeah, but they might only have jobs because they can't get a job anywhere else.
All right.
That's why they're sell side analysts.
Real fast.
85 to 385. He raised the price target on Tesla by $300.
I just like it when they upgrade Weight Watchers to overweight. Like that gets me every time.
I know.
Like it still doesn't. It never gets old.
Real fast. We have Kenny. I want to bring Kenny on just for a couple minutes, and then
also when they upgrade, when they go from a sell to a hold, it's like hold what? You told me to fucking sell.
Yeah, you can't hold something you don't own, right?
All right, I'm bringing Kenny on, and then we'll bring on Larry. All right. All right.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
All right, Kenny Glick.
That's a good one,
man. I wanted to make sure that we chatted. We got Larry in the house. Very much looking forward to Larry. A little bit of a longer time frame than Kenny, but let's get down to it. Kenny, what's on the radar? What are we trading this morning?
No, but Larry, you better have some theme music. You know what? Yesterday was kind of boring. Today seems a little slow today as well. But considering what we got on Wednesday and Friday of last week, I was kind of just welcoming some sideways action and just to regroup. But listen, you got a stock like ZJK. Take a look at this crazy one. $6 to $50 already. And I'm looking to get a borrow on this. And I was just explaining to people, when there's nothing to do, there's always something to do, but those something to do stocks could get you in a lot of trouble, like stocks like ZJK. So
dude, this thing's up 220%.
Right. It was just at $50. So there's a pump and dump like this almost every day. I'm always right there with these. Again, I like the ones that have come out of the Andy Dufresne. This one came out of nowhere. I don't know what this is, but if you have a good platform, we've been talking about this on the show because we got a lot of new traders with us. The platform gives you something called the borrow. the borrow feature. Some of these stocks, these pump and dumps, all you want to do is short them. You should be looking to short them. They can be dangerous, but once you know what you're doing and you're just trading VWAP, you got to get something what's called a borrow, folks. So it goes out there and searches for the shares to short, and then you pay a little fee, and then you have the access to short them, just like that QMCO.
And the fee is an annualized fee?
This is just a daily fee. You pay a one-time fee depending on the illiquidity of the stock. Sometimes it'll cost you maybe $8 to short 1,000. Sometimes it costs you a couple of hundred, like the Trump stock when it first came out. Everybody wanted to short it. They wanted to charge you $300 just for the right to short 1,000 shares on the day. Sometimes it's worth it because the stock is that volatile. And, something like ZJK, where you just look at it and you go, okay, when do I short this thing? And, right now it's working. But more importantly, the market on fire. The quantum stocks, the AI stocks, the chip stocks, they all just took a break yesterday, and the money went right back into the queues. We hit all-time highs. So we're right in that sweet spot. The money's not coming out of the market. It's just rotating and rotating and rotating, loving the solars. But right now, I'm kind of just taking a step back. The market looks like it wants to take a breath. I'm going to be chilling. And again, we always find something to do, on a daily basis. But again, when you got stocks like ZJK, it's just like falling in 2-point increments right now. It's absurd. But there's just a lot to do each day if you know where to look, and I know where to look.
Give us one more, Kenny.
I'm going to be looking at my Lunar, because it had a 3-point rip on Friday. It broke out and then it came back in. So if this thing goes back to 1360, I'm a buyer again. I'm accumulating Lunar, LUNR, and I definitely want you to watch Credo, CRDO. Chip stock, one of the ones I got wrong a couple of years ago. And man, this stock is up more now today than the stock was worth when I owned it. So just a crazy run on CRDO.
This is the new favorite AI play. This is the AI play of the week, CRDO. They had earnings last night.
Credo has an illegitimate stepson, NVTS. Keep an eye on that for some pin action.
All right. At thebid.com, guys. Kenny's live trading room is there every single day, trading through the open and beyond. Get his room, get his trades, get his custom scan or script, and your life will be better. I promise.
Cheers, man. See you later.
All right.
All right. Good luck, everybody.
And that is that. All right. Should we bring on Larry Tentarelli?
Please.
All right. Let's do it. Larry's here, and we got him. So here we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Larry, what's up?
Hey, good morning, JC. Good morning, Spencer.
Hey, how we doing?
Good. Happy belated Thanksgiving.
Likewise. Did the hurricanes ruin that for you?
JC, Syracuse did not do us any favors.
Good.
I was ready to get my tickets to the national championship game, and that might not be happening.
Yeah, me too, brother. How about Sebastian the Ibis hitting on the sideline reporter? Saw that?
Yeah. Hey, they've got to get a win somewhere, right?
I see what you did there, Larry. See what you did there. All right. So we are, let's see, it is December. So I would argue we are roughly 2.5 years into this bull market. For you math majors, that is approximately 10 quarters. Is that right? About 10 quarters of this bull market. We are not seeing any kind of real breadth deterioration. Quite the opposite, actually. Some of the laggers that we had been seeing that hadn't made new all-time highs yet, things like Amazon and Bitcoin and some of the small cap indexes, software, they're now breaking out to new all-time highs. So we're seeing expansion by my work, not deterioration. That's how I see it. But Larry, you tell me, what's on your radar? What are you seeing out there?
Yeah, well, I agree, JC. So just recently we've had new highs in the S&P 500, the Dow Jones Industrial Average, the New York Stock Exchange Index, small caps, the S&P Advanced Decline Line, and then yesterday Triple Q followed up and made new highs. So I think breadth is very strong across the board. It's not just, by far, it's not just tech. Financials are breaking out, industrials, even real estate's breaking out. So it's a very strong market.
When you talk about the length of cycles, Larry. You know, if the bull market were to end today, which it could, we don't know, it would go down as a shorter in duration bull market, below average returns in a bull market. Just seems like odds are, based on history, that this thing's got legs through next year and beyond potentially. Like when you think about the cycles and you think about like the type of market environment we're in to help you decide how to approach the marketplace, like how do you think about where we are and how long this could last? Or do you ignore that completely and take it one day at a time?
I look at both. So we are early as far as the duration of a bull market, but the bigger thing that I see is with the market broadening out and not narrowing. I think that that's very bullish, and that tells us that there's probably more to go, because a year and a half ago, the big argument was it's only 5 stocks or 7 stocks or whatever it was that was doing the lifting. But now what you've seen is, if you look at some of those mega caps, like Microsoft has been about flat for the past 6 or 8 months or so.
Yeah.
Google's been about flat for the past 6 or 8 months. But what you're seeing now is there's been a rotation into a lot of these cloud stocks, what I call the ARC stocks. ARC ETF is starting to break out. So when I see the market broadening out and the market's not saying, okay, let's congregate in these 7 stocks, but let's buy these industrials, let's buy the energy stocks that are breaking out, let's buy, the ARC ETF. As long as we don't go into a recession or anything like that, and there's nothing on the radar screen that says recession whatsoever, with the Fed easing, I think that really gives some rocket fuel. But when you look at the overall market with just everything breaking out, it says to me there's probably a lot more to go.
When you think about these ARC stocks, and this is something that Steve Strazza has been pounding the table on, he calls it speculative growth, right? And ARC is a great kind of basically like the bellwether, the benchmark, kind of exhibit A of that theme. But there are other names on there as well. But that speculative growth theme has been working. Do you think of it like these are laggards that are now trying to catch up to the leaders, which is consistent with a bull market? Or do you look at it like, dude, they're even buying this garbage like it's late? Like, how do you differentiate between both of those two different mentalities?
I think that it's I don't think that it's late. I think that it's even though I think the market is so strong right now that even the laggards are starting to catch up. And we've really seen that over the past 3 months or so. But when you look at these cloud stocks, so, fintech, cloud stocks like Affirm have been breaking out. Stocks like Square have been really strong. Cloudflare has been really strong. So what that tells me is in 2020, after COVID and everything, once the Fed started to cut, those stocks were the leaders. ARC went through the roof. I think Cloudflare was like an 8-bagger. And I think what the market is telling you now is with these laggards now starting to lead, I think that bodes for even more strength in the market.
What about the cap scale, right? When you think about where we are in the cycle, are you paying more attention to small caps and mid caps because of that stuff that you're seeing? Or do you find yourself paying more attention to those groups simply because that's what the strength has been recently? Like when you go down the cap scale, how do you think about that?
I've been going down the cap scale, and that goes in line
More so than earlier in the cycle, you think?
Yeah, I think by going down the cap scale, it goes back to that theme of where, the market might have been hibernating in those mega caps. And now I think that the small caps, they're breaking out, mid caps are breaking out. But just in the scale, like I've reduced some of my triple Qs and moved more into the stocks that are, under $100 billion, maybe in the $10-20 billion range, because I think that there's more upside there than, I'm still bullish on the Qs, and Apple broke out, made new highs. Meta is just below new highs. Tesla is trying to break out to a multi-year high. Amazon looks pretty good. So I'm bullish on the Qs, but I think that you're going to outperform going down the market cap scale, maybe, under 100 billion, under 50 billion. I think that's the sweet spot.
But in tech specifically, or all over the place?
Everywhere.
Everywhere?
Everywhere, even like in the banks. I think, for example, you've got the big names, JP Morgan, Goldman Sachs, but I think as you move down into the regional banks, I think you're going to get more upside because they tend to trade more with the small caps and trade more with the mid caps. The bank ETF KBE just broke out to new all-time highs. It finally cleared the 2007 highs. So if you look at some of these stocks like Apple, Nvidia, Meta, they've been on these huge runs, but the banks right now are just getting over a 17-year range. So I think there's a lot of potential upside there with these regional banks, banks overall. Some of the industrials have been, under-owned. I think the tech gave so much outperformance for such a long time. Look at the energy sector. I think it's 3.5% of SPY right now. If I'm not wrong, at one time it was, 15% of SPY. So I think that the market's going to continue to broaden out. And I think while the triple Qs are great, financials are outperforming year to date. I'm pretty sure industrials are outperforming year to date. The regional banks are outperforming. I just think it makes sense to spread out. I still want to have Nvidia. I still want to have Tesla, but I want to have some of those sectors that have been under-owned because I think they're going to outperform.
Can you throw up that slide 2 there, Spencer, please? This is that chart of Tesla. And the way that I saw it was, consumer discretionaries were potentially trying to, put in a 10-year top on a relative basis. This is consumer discretionary. And I'm thinking, if this bull market has legs, then this consumer discretionary sector is probably not going to complete this massive top relative to the rest of the market.
Right.
And I was in the camp this summer that this bull market did in fact have legs. So if you reverse engineer this bull market having legs, they got to be buying discretionary. So look for a breakout on Amazon. Tesla's number 2. So buy Tesla, right? Like that was that like top down approach to why we were buying Tesla, not because of like how many cars they were going to manufacture or whatever these people are looking at, right? This looks great, Larry.
Listen, I'm a Tesla bull. I bought back into Tesla the day after the election just because I thought it made sense. Once it cleared 300, I bought some more. There's a lot more to Tesla than just the EVs, AI, the robotics, the autonomous vehicles, all that. But just by looking at that chart, I think if Tesla can close over 360 on a weekly basis, I think that's going to bring up new highs. Amazon's just below new highs. If you look at cruise lines, if you punch up like Norwegian cruise lines or Royal Caribbean, those are breaking out. Consumer discretionary is really strong, and it makes sense, with interest rates coming down, or I should say the overnight rate is coming down. Bond yields have been all over the place. But yeah, consumer discretionary looks good.
Here, throw up. I'm so happy that you talked about the cruise lines, because when early last year, when they were talking about how it was only 7 stocks or 6 stocks or whatever that nonsense was,
right?
These cruise lines were ripping. So I'm like, are you sure it's just 7 stocks? Because I'm counting a lot more than just 7 stocks, and these cruise lines are ripping, and I'm pretty sure they're not included in your 7. Throw up slide 3 there, Spencer. So this here we're looking at consumer discretionary making new all-time highs on both a market cap weighted basis and an equally weighted basis. Just an FYI. Are we going to make the bet that Tesla's not going to do that? Like, I think that's foolish. I think you got to make the bet that Tesla's going to do that. I think you're spot on, Larry.
Yeah, Tesla is right now. It's of the big stocks. It's my favorite breakout idea. I think it's going to make new highs, and I think it's going to break out pretty strong.
And Larry, even this summer, I mean, now, like in hindsight, like sure, but this summer I was saying, what's the risk in Tesla? What's the risk? Because you had very well-defined risk at the entry point this summer. But what's the risk? In my opinion, the risk was not owning enough. The risk was that this becomes the largest company in the world.
Yeah.
The risk is that you don't have enough exposure to a company climbing up that leaderboard as aggressively as something like Tesla can do, and has proven it can do it before. Let's remember, Tesla was up 3,000% in like 2 years, a year and a half, something ridiculous.
Yeah, look at
No
that
CEO in history had made that much money for
2018
shareholders.
move. Yeah, if you look at that big breakout move from 2018, I don't know what it went, 10, 15x in a short period of time. Now, obviously, the market cap was smaller, but I think if we look at the move that NVIDIA made over the past 18 months, we've shown that this market can push these big market caps. And Tesla's what, a $1 trillion stock. It's the same price now that it was in it looks like 2020 on that chart. So the market's gone through the roof. Tesla looks like it's just by looking at your chart, it looks like it's on the launch pad.
Yeah. And it's discretionary in general. Even something like Disney, right? Which I think is Disney considered communications, or is it still discretionary? I think it still might be discretionary, right?
Yeah. I'm not sure.
It's probably a little bit of both these days, right? I mean, I know that I got Disney Plus on like 24/7 at my house.
Oh yeah.
Walt Disney, according to the geniuses over at Standard & Poor's, is officially a communication services company. How about that?
Okay.
All right. So can't make fun of Standard. It's probably about right. Yeah, that probably makes sense.
Yeah.
All right. And then before we let you run, Larry, we talk about discretionary. We talk about technology, potential rotation into, semiconductors and breadth expansion, small caps, and everything like that. How about what's not working? How about the fact that consumer staples on a relative basis are making new all-time lows on both a market cap weighted and an equally weighted basis? Like, how do you think about the stuff that's not working? Healthcare is another one. How do you think about the stuff that's not working and what that means for the overall market?
So it's bullish for the overall market, because what the market's moved obviously into more risk. So it's moved into the cyclical sectors. It's moved into the aggressive growth. Bitcoin is broken out. So you want to see consumer staples lagging in a true bull market. Because if money's rotating into consumer staples, if you're a fund manager and you're buying consumer staples, then you're really betting for the most part on no growth, slow growth, and you're looking for a place to park money. So the fact that the industrials are breaking out, the discretionaries, the stocks that are higher beta should be breaking out, and consumer staples should be lagging in a healthy bull market. If it was staples and bonds and defensive sectors leading, I would say that was a poor sign. So I think that staples breaking down is a bullish sign.
And at what point will you say that that's no longer the case, right? Like, at what point, do we need to are you looking at staples on an absolute basis? Are you looking at it more relative to the overall market? Are you looking at staples relative to discretionaries? Like, what would need to happen for you to say the opposite of what you just described? How in healthy market environments, staples underperform? Like, how are you thinking about the other side? That's how I like to look at it.
Yeah.
What's going to change?
So you and I were always looking at the charts. And what would have to change for me, is staples would have to start to lead. So, I've got one consumer staple stock. I've got Walmart, and that's been an outlier.
And one can argue that Walmart may not be a consumer staple.
Could be more discretionary,
And Costco?
Costco's breaking out too. Costco's
are those really staples, Larry?
Yeah, they're more discretionary, and I think that some websites that you look at will put them under discretionary, because the bottom line is, if we're spending money, whether it's at Walmart or Costco, we're still spending the money. But what would need to change is staples would need to become a relative leader in the market, and right now they're a relative laggard. The XLP has been breaking down. Healthcare has been very weak, and I think that is somewhat of a bullish sign too. Because if you're a fund manager and you're betting on a stronger economy, if you're betting on economic growth, and if you're betting on a stronger market, then you want to be in those sectors that are more tied to the economy. Healthcare tends to be more stable and not as cyclical with the economy. So those are also bullish signs for cyclicals.
Couldn't agree more. Finally, just again, playing devil's advocate, bull market, sector rotation, breadth expansion from like a bigger level, whether maybe more macro, more international, or whether we're staying here in the United States, like, are you looking for momentum divergences, breadth divergences? Like, what would make you become a little bit more cautious? Is something in the dollar or rates? Like, what would make you pull back the reins a little bit?
I'd really have to see the index charts start to break down. So the index charts are really strong, and I would need to see the leading charts start to break down. And right now, the leaders are actually breaking out. So if I started to see, a series of lower highs, if we put in like a climactic gap up, and then for some reason we pulled back sharply, and then we started to see a lower high and a lower low, that would make me a little more concerned. If the market started to lose their 50-day moving average, that would be a little more cautionary. But right now, it's the opposite. Everything's breaking out. The moving averages are rising. The weekly charts are set up well. So I need to see the reverse of what's happening now. See some lower highs, see a couple lower lows, see a couple moving averages break down. But I don't see any of that right now.
Couldn't agree more, Larry. Miami Hurricanes, are they going to make it to the playoff? Are they going to back into the playoff somehow, or
they will be in?
We're going to be on the Idaho Potato Bowl or something.
They're going to be in that top 12 final cut, I believe. They've got too much firepower. I think people, the committee is going to want to see them in the top 12. And any one game, they can do they could beat almost any team in the country if they play their best game, if Cam Ward is on fire.
I know, but that secondary's weak, bro.
Yeah. You know what it is? This year, they've struggled in a lot of games. They struggled with California. They were down by 25 points. They struggled with Virginia Tech. They haven't been dominant. So I think they could beat, on a good day, they can stay there with anyone. But I don't know if they can beat, Oregon or beat Texas and even Georgia.
You can't. No matter who your quarter, you can have freaking Tom Brady as your quarterback, Joe Montana. If you can't stop the other team and your secondary keeps getting beat and mistake after mistake, you're not going to win.
Yeah, exactly. And that's what they've got right now. So fingers crossed. But I'm not buying any national championship tickets yet.
Unfortunately.
Wait, Larry.
We'll get there, Larry. You and me will be tailgating at the national championship game before you know it. Don't worry.
Just say when. I'll be right there. Let's go.
I'm waiting, bro. I've been waiting for 20-something years.
Yeah, me too.
All right, Larry. Thanks for being here.
Thanks a lot, Larry.
Guys, you got it. Thanks. Have a great day.
All right.
See you later.
We haven't talked about, I was going to ask Larry about it. But we haven't talked about international at all this week. I'm sure you'll talk about it tonight, JC, on the call.
I can't help myself. I got so many international stocks.
I mean,
Israel is
Europe. Europe. Europe has my attention here, right? I mean,
what?
Germany, France, UK, looking good.
Nah, not as good as Israel, man.
I don't keep the Israel index or exchange, whatever that is.
For someone with the last name Israel, maybe you should include.
Maybe I should start. We talked about this the other week in the ETF. Yeah. But no, international is looking juicy. We talk about China a lot on this show, but like Europe, looking juicy. That's all I'm saying. All right, it is 9:26. Couple of things I want to get out of the way before we move on. We talked about the Credo this morning. That's like the new AI play du jour. They had earnings. We had Zscaler earnings this morning as well. Last I checked, that was trading down. It still is trading down about 6% on that report. Numbers that, from what I saw, actually weren't terrible, but numbers don't matter. It's the reaction that matters more. So Zscaler down 6%. Do we have the earnings calendar? Can we bring it up, Fonz? Because we have some earnings tonight and tomorrow, and this is kind of like the last hurrah of earnings season, gratefully for you, JC. I know we have Salesforce. I want to say, is that tonight? Yeah, Salesforce is tonight. A bunch of like cybersecurity tech type names like Okta and and Box and Marvel and Sentinel One this week. Got some retail as well. So yeah, this is kind of like this is it. This is kind of the last hurrah of the earnings season. Salesforce is going to be the big one of the week. Like I said, they're tonight. So we've got that. Other headlines, we got some Black Friday / Cyber Monday stats, and it was a doozy. JC, Shopify came out with some numbers. Adobe came out with some numbers, and it was a massive day. Yes, I just closed out the tab where I had it, but it was like 20% year-over-year growth on Shopify for Black Friday and Cyber Monday shopping. So
can we talk about the coping? I want to talk about the coping before we run. We're gonna cut the show short today. We got a big conference call tonight. Spencer, if you drop the link for anybody who is not a premium member of All Star Charts, this is as good as it gets tonight. This is the Super Bowl of technical analysis this evening, 8 p.m. Eastern time. Be there or be square. Spencer Israel, if you throw up slide 2, the coping here is real. If you want to zoom in there, the coping very real. Black Friday weekend to break sales records as cash-strapped customers wait for deals and discounts. This psychopath, a one Taylor Herzik, is hoping so hard that this Taylor, I don't know if it's a female or a male, this particular person here, maybe undecided, I don't know. This particular person is coping so hard that they are talking about the greatest Christmas ever for sales is so because customers are cash strapped. Like,
if I could stick up for Taylor for a moment here, I can almost guarantee you that Taylor did not write that headline. So whoever wrote that headline,
Taylor, I don't know if you're a male or female or undecided, but you suck.
Taylor did not write the headline. I'm telling you.
Suck, Taylor.
Taylor didn't write the headline.
I want to give a shout out to Jeff Mackey. We were chatting over the weekend. He's the one who sent this over to me. We both thought it was hilarious. Taylor, do better. Weak
Taylor
sauce,
didn't
Taylor.
write the headline. Some editor, some faceless editor on the copy desk wrote that headline. Probably.
Black Friday weekend to break sales record.
Yeah, I'm not really sure.
Customers wait for deals and discounts.
I mean, that's one way to angle it. I'm not really sure how it's bearish that people are spending like gobbles of money, record amounts of money, shopping. But that's one way to spin it, I suppose.
Wow.
But it was, like I said, the stats are coming back today. It was a massive weekend for retail, and I'm sure we're hearing more this week because we have some retail reports coming out still. So, yeah, I personally did not do any Black Friday, Cyber Monday shopping, but everyone else seemed to. So,
wow.
Anyway, okay. So yes, you have to hop early because you have the conference call tonight. You have to prepare for. Steve's getting new windows put in like as we speak. So why don't we just wrap it up here and we'll end it a little early, and that's okay. Because it's the internet, we can do that sort of thing. And yeah, so we have Spaces at 11 o'clock, chart report. We got the Flow Show at 1, and hopefully we'll have I might try to get Kenny Glick to go live at 3:30 on YouTube on our channel. Could be fun to watch him trade the close here today. So that's what we'll try to do. And that'll be our plan for the day. So thank you to Larry for hanging out. Thanks, Kenny, as always, for hanging out. Thanks, chat, for hanging out. And yeah, we'll give JC an extra half hour to prepare for tonight. If you're not a member of AAC Premium, you will not get this conference call or the charts that go with it. If you are a member, you already got the invite link, and you'll of course get the replay and the chart book that is God only knows how many charts long at this point, 100, 110, 120, who even knows.
I'll take the over.
So 8 p.m. Eastern time tonight. We'll see all your members there for the call. Have a great rest of your day. Smash the like. Go make some money. We'll see you later. All right.
Adios.
Peace out.
I can't take no loss. I don't even know what it costs.